Just doing a quick sound check. Thank you for the happy birthday. Let me know you can hear me all right. Awesome. Thank you, folks. We'll get going here in just a couple minutes. Let the room fill up a little bit. We'll get started here in just a minute or so. One minute, everyone. So we all know it's what time it's Runa time. Time to go. You actually had a bid in on Hood on the other day and didn't get hit. I got greedy. Welcome everyone. I'm in my old studio. This is a studio I used for years to do a broadcast we used to call Market Thunder back in the day. and I pulled it out. You got to do something, I guess, new. And yeah, I'm on a green screen. Yes, I am. But it's one of those days. I'm just trying to find out and have some fun with the channel, trying to figure out how to communicate best. Anyway, welcome. We haven't done one of these, we'll call it long form streams, for a while. I've had last month in July was absolutely crazy for me, and you know, the markets were pretty good last month, and we're really just kind of looking at the entire world in a different view right now because of all of the we'll just call it the Delta and the continuing game to control the planet. And I'm going to be very careful what I say here. Yeah, it really makes it really hard to be to feel censored in this world. And I'm working on a couple things so we won't ever have to feel that way again. And we'll see how that project comes together. I'm putting something together. I will let you folks know when it's ready. Also, just a quick couple cleanup things just as the room continues to fill up. I am working on a video that is going to be focused in on what on the big picture of things, and also from an economic standpoint. And it's coming along, but it's kind of clunking along. I put a fair amount of time in on the weekend. I'm hoping that in the next couple of days I'll be able to get really close to finishing it and hopefully have it out by Monday of next week. But the whole plan is to really talk about some of the bigger elements that are going on, and I'll just kind of get into the broadcast here then, and we'll start to. Yeah, I am actually looking at Rumble. Somebody just said that is probably what I'm doing. I just put a count together the other day, and I'm looking at doing a private channel on my own servers. I will anyway. We'll talk about that when it's appropriate timing. And I just want to tell you folks, if you haven't done this, do this while we're, like I said, I would definitely come up and go to the kendallreport.com. And if you haven't been here, it's just a place. There's nothing here other than a place to give us your name and address. You can make a comment if you want. But the purpose for this is for some content. We haven't, any of you that have signed up on this know that you don't get very many emails. We don't hammer you. We're not those guys. We do put some things out from time to time. But this is a good place to sign up and go to the Kendall Report, give us your name, email address we can contact you at. And then when we start to work on potentially some of these other channels and some concepts that we and me want to do, that will get us into a place where we can have a real open discussion about things. It's the last thing I want to do is do anything to keep our communication that we have right now with our community and do anything like that. So you guys know what's going on. So let's start talking about some of the things that I believe are really important to at least be considering. And when we get into markets, you continue to see the markets just kind of struggle here at this 4,400 level. But it has everything to do with the most incompetent part of our planet, which is governments. They have become incredibly stupid, and it doesn't matter which one you're talking about, actually. But we are seeing some really crazy stuff, especially around this infrastructure deal. And I want to start there and talking about that today. As the infrastructure deal, there's actually two deals, and I think it's a little bit underhand, and I think there's a lot of folks that are on whatever side of the aisle they're on are participating for maybe all the wrong reasons. Maybe they think they're the right reasons. But the infrastructure deal is a $1.1 trillion deal. There's some good stuff in there. Okay, there's I've talked about this before. You know, being a, we'll call it a mature American. I've been around here for 69 years now, and I've seen a lot of stuff. But you know, America's like the Old West. We haven't really modernized this country at the level that we've seen in just about any country you want to go to. I mean, you know, you can look at like Panama City, Panama, and it looks like you're in Asia. Asia has infrastructure, everything is just amazing. The problem that I see is, like, if you go to Beijing or any of the big Chinese cities, you'll see amazing infrastructure and things that they built there. Well, they built that from selling products and making money. And this is part of the video that I'm putting together. I'm not going to go into too many details. I don't want to take away from that. I've got a lot of work in that. And, you know, it all, in our case, we're doing this through creating money through MMT, and everything's going to get changed here. Now, whether they're putting electric charging stations all around, that's one thing. And, you know, I oftentimes, well, Tesla is one of the, I guess, visible places to go to from the standpoint of electric cars. The real electric car is the one that's on the screen here, and I keep telling everybody this thing's a spaceship. This is the Mercedes EQS, and this is a review video here, but it's pretty amazing when you see this car and look at some of the reviews. This is like a real luxury car. I always tell everybody, you can build cars, but nobody can beat the Germans when it comes to luxury. And while Tesla led the way, we're going to see a lot of this stuff, but this is the world that's being created for us. And whether you like it or not, I'm a combustion engine guy. I'm an old school guy, and a lot of people will always be. I don't think they're going to go away by any means, but I do expect that there's going to be a fair amount of how's the best way to put it? Fair amount of push to go this way. It's going to take decades to get rid of the combustion fuels. And in today's video, I'm going to go through crude oil, all of that stuff. I'm going to talk about a lot of things that I think will be important. And, you know, there's just a lot of capacity issues on electric car. But I love that EQS. And it's about 20,000 more than actually, you can buy that EQS for less than, I think, the Plaid, the Tesla Plaid, which is a piece of plastic with a computer screen in it. So, you know, anyway, check that car out. I'm not getting paid for that, by the way. But I just absolutely, I'm a car guy, and I love this car. Just as far as the infrastructure deal goes, there's going to be some interesting things come down, because they're going to get this thing through Senate, then they're going to put it into the House, and the House is going to do this reconciliation deal, which is going to add another $3.5 trillion. If we look at what just happened in the last year, folks, there have been literally trillions of dollars put out there, but they haven't spent any of the money. It's like being stored away. There are states that have hundreds of billions of dollars that have been granted to them from the federal government, and they're not using them. They're not doing anything with them. And, you know, it's just nobody wants to work. They want to build infrastructure. Who's going to build them? They better get some really good robots, because there's a lot of issues around this. But the point is that if they add another 4.7 trillion dollars to this thing, what they're doing is setting up a long-term approach, which is fine. But we know that the government printing that kind of money, it's just going to be, there's going to be a lot of waste. And boy, talk about, there's going to be a lot of folks to be really, really, let's just say, there's going to be an advantage, and it's not going to be helping the lower end of the economy, as always. I think all of this stuff they're doing, these infrastructure deals, just about everything, MMT, is going to create actually the largest gap in wages and wealth, everything that's ever been on this planet. They're actually going to do the opposite of what is claimed that they're doing, in my opinion. And I'm going to tie this all together here in a minute in the markets. And so when I think about this infrastructure, all this money that's going to be put out there, what I see ultimately is actually an inflationary scenario that is beyond belief. If you just look at what's went on with the market so far, we're just grinding up here, and we've seen the 10-year come in. I'm going to cover all this stuff in detail in a minute, but we've seen all this stuff happen, but we're not getting any traction in the markets. The equity markets are acting a bit tired, and there's just a lot of rhetoric around it. It's becoming a consensus, actually, that the market's going to roll over and go down. That's the big thing. I saw an interesting story, just a quick segue, but it all relates, is Citibank, one of their analysts is predicting a pretty large correction. Why? Because there's novice investors out there. Otherwise, you retail folks that are out there, you're just novices. The public's just stupid. They can't think for themselves. And I've told you folks this. I'm giving you guys, all you folks, guys and gals, I guess the kudos, as I've learned a lot from dealing with a retail group. I've not hung around retail people. I've met a lot of amazing people out there. We're working on putting a conference together early next year, probably March. And I'm excited about that. I'm just preliminary stuff. Second I have all this stuff, we'll get everything set up, and hopefully there's no disasters in the world that keep us from doing that. But we're going to work toward that, and that's an exciting event. I'm pushing, like I said, around March. But what we're seeing here from across the board with all of this stuff is that these governments are just trying to keep us going back. So let me backtrack just a little bit back to the infrastructure deal. And the infrastructure deal is going to be massive inflation when they start to actually spend the money. Like I said, I saw somewhere there's six or this number don't. So if you fact check me, I don't know this exact number, but I know it's somewhere between $400 and $600 billion is just laying out there waiting to be spent. And what are they going to spend it on? You know, let's get to it. You want to build roads, fix bridges? Let's do it. The money's there. But like I said, the problem is there's no one to work the other day. And, I was privy to an experience of actually my brother coming back from Mexico the other day and getting it. He ended up flying over a city waiting to land because there were no terminals that had people to work at them. So the airports are all snagged. When he went from the international terminal to the domestic terminal, there were over 600 people at 10:30 at night in Las Vegas. So, it's just crazy. There's just a bottleneck of everything, and everything worked fine. If you think about it, we go back to 2019, everything was working fine. Now all of a sudden nothing works, and I don't know how to coin this any different than there's a complete different mentality about the markets and about the economy and everything that's going on, and nobody wants to work. We know that, right? So we saw that actually if we look at the ADP numbers that came out this morning, and so those were pretty revealing, and we're inching toward the. They were looking at 750. I think they came in 350. And what we're looking at here is the employment numbers. There's not really that much of a correlation, but what we really are seeing is that economy is starting to slow. It's not accelerating. The reopen trade is not happening. That's why you're seeing the Russell and under pressure here again. And we're just not seeing any of those metrics that we were told going to happen. And I've been talking about this for 2 months now, telling you that as we come into August, September, and as we get into the fourth quarter, you're going to see the opposite of what you're told, which is the economy going to slow down. Is it going to be because of the Delta? I don't know. It's just everything starts to look that way. I talked about unemployment. We get employment numbers here coming in on Friday. I'm looking for unemployment to get back up to around 6.8, maybe up into 7% handle again. And so there's just a lot of stuff out there that we're not going to be able to. It's not going to be necessarily very predictable, but it appears to be changing. The trends tend to be changing as we go forward. Tomorrow we'll get the claims numbers and the continuing claims. I'll talk about that. I am going to do a live stream, in spite of doing this very long stream today. I am going to do a live stream tonight. Been doing them. If you're just tuning into the channel every night at 9 o'clock, I do about a 20-minute channel. I'm going to cover the individual stocks. So usually on a Wednesday night stream, I will cover individual stocks. I'm going to do all that today in this long stream. So we'll cover that when it's appropriate. I'll ask you what's going on there. So I'll give you time to give me some symbols. But so that's what's going on there. This infrastructure thing I think is what's creating the uncertainty. I think it's because of the government's unable to make any kind of decisions, the messaging, everything out there. I mean, I don't know about you folks, but it just is the craziest thing I've ever seen. And I've been focused in on this in the world. I started in the markets in 1979, and I live and breathe this stuff every day, and I've never seen anything like this. The communication from agencies, it doesn't matter, not just medical, from all agencies. I've never seen anything like this before. So there's a big shift going, and I'll give you a quick hint. Is the name of the video coming out is called "The Changing of the Guards," and I'm anxious to get this out here because I've got a lot of thoughts that I'm trying to get really solidified so it makes some sense, and you can follow it pretty quick. But we'll go to the markets now. The one other thing I want to mention along with the infrastructure is the debt ceiling. That just ran out. The Treasury's now doing the typical emergency strategy where they can pay for, I think, the next 90 days without the debt ceiling being expanded, and that will be it. Well, guess what? This is the same story. I can't even remember when the first part of this debt ceiling story started. It was a decade ago, and they just keep bumping it. It was more than that possibly. But the point of it is that they're going to raise it, okay? It's a joke to even consider it as being a market factor. I don't think right now that any of the folks out there are going to want to play any kind of games around the markets as far as the political side of this goes. No one's going to burn their political capital at this point in time, and so that's why we just see these markets just stuck at this 4,400 level. But we did this at 4,300 too. So okay, moving on a little bit here just to talk some background. Then I'll get into some of the individual stocks. And typically on these long first hour of the live stream, I'll go through all the markets and all the common stuff that I want to cover through the indices and those type of things. And then we'll move on to the backdrop and commodities and things like that. I am going to bring up in a few minutes, we're going to talk a little long-term S&P for a bit because I think it's just, we're coming to an end of the party, but it may not be the end of the party. And I'll talk about that here in a minute too. So what's been driving this market is all the FANGman stocks, right? You got Facebook, Amazon, Netflix, Google, Microsoft, Apple, and NVIDIA. That's the FANGman now, right? They had to expand it because there's more. And those are continuing to drive. And I'm going to show you when I go through the technicals here in a few minutes that, you'll see that in the spreads. You'll see that everywhere you go. And this is going to continue for a while. And especially back to the infrastructure, this is where the benefits of that infrastructure deal, at least initially, is going to continue to benefit these large cap stocks. Ultimately, maybe we'll look at some of the stocks like CAT and some other things that maybe will benefit I think that's the reason why Tesla is rallying, because they're going to get electric charging stations everywhere. And, so, but that also is going to take a long time, and I did see an interview with Elon Musk, and he was talking about that he absolutely, they need every battery they can get their hands on to try to achieve this. And that there's a lot of constraints on getting the electric cars out there. It's going to be very interesting as we go forward. Just from raw materials, somebody needs to come up with a new battery. Okay. Yeah, so anyway, let's go ahead and start to dig into some of the technicals, and so we can get an idea for what's happening. I go through everything every night, but let's go ahead and do this and see what we've got going here. And just a quick, I'm just going to look at some of the comments that are coming through right now. Yeah, I will cover, I've talked about the repos. There's a recent comment on the repos. The repos are not a factor. And I will go through that because I'm going to cover the 10-year. And if I'm covering the 10-year, please remind me if I don't mention the repos to cover that at that point. But as far as market goes, like I said, I've been talking about this every night. So that's why I want to go over to the longer term aspects of this market, because this is covered every day on the channel. And we're just continuing. What's the number? The 10 period moving average. I'll bring that up on the screen here just so you can see it. Let me zoom in on that. Is the 10 pair moving average 43.96, the low 43.91. This is the futures. If we look at I talked about this in last night's stream, is 43.93 was S2. I thought we might see an S2. We printed just below it. We're back above 44.03 at the moment. So we're getting a bounce off of those numbers. Probably could actually print into a new high on the day here. I think if we can get above this 04 number, 44.04, we'll watch this closely as the stream goes on. But I think we could see a pretty decent rally back here if we get above that number. So I'll be watching. It's 03 right now. 04, 05 is going to be resistance. Above that, you're going to start to see some things move back up. So let's go over, and I'm going to flip to, back over, and we're going to go to a long-term view of the markets. And I want to look at the S&P, and this screen that I have up here right now is actually going back to all the way back to 1872. So this is a quarterly. So I want to talk about this. From a secular viewpoint, actually from a super cycle viewpoint, we are in a fifth wave. But if I were to convert this over to a log chart, we'd see something interesting, because the length of wave 1, if we're in a wave 5, it does suggest that there's potential for much more to the upside. Now, this is one of the analyses that I'm doing in the video I'm bringing up, but there's a number of things that have occurred at each major top going back to if you look at 1 and 3, and we only have some of the elements starting to come together right now. And we need probably 3 or 4 other elements that come together that are going to actually indicate that the market's going to roll over. I do not see us at a rollover point now. Should you be in cash? Not necessarily, but you should be very selective. So somebody asked, should we be? It sounds like we should be in cash. I don't think you should be in cash totally. As you folks know, I cover our database every night, and we look at a lot of trends, and I'll go through that as well. I'll tie this all together because the concept that we're talking about here, and when you get into a long-term viewpoint like this, you're really looking at the timing gets harder and harder as you get longer and longer term. Short term, going from day to day, 1 week, 3 week, 5 weeks. When you start to get into these longer term analysis, it gets much more difficult to time the market down to a turning point. But it's interesting. Every one of the tops that we've had, once we actually reach the top, there's at least 1 quarter of negative. And also I have my PPMs here, and this is actually starting to show the first signs of what a potential point that a top would form at. We don't have. And it was also interesting, if we go all the way, I went all the way back to 1944. There's only been, if you see, let me blow this up a little bit. I have no idea what just happened. The TradingView froze up, but let's just look at this right here. You're going to see the number of downward quarters are very, very few. We did see a nice sequence down in 2000. There were 6 quarters down from the 07 down to the 09. But if you look back, we've only had these little incremental quarterly snafus here, and we've not ever seen this. We have not seen as of yet a negative quarter since we bought last year, right? Since 2020. So if we just look at the symmetrics here of this wave pattern, we are potentially close to finishing what I believe is, I've got the wave 5 up here, but there's a sub-wave 3 here. I think we could enter into something that would look like, I'm going to bring this on screen. This was one of the, I think I talked to you folks about this. One of my mentor that when I first came into market in 79, he lived through this 65 through 74 level. And to talk about that time of history in the markets, it was worse than anything that ever had been seen. I mean, it was absolutely ridiculous. And when we look at it, you can see it was like this bugle formation ended up to be quite bullish. And the same guy that was telling me how brutal it was, he was very big into book values and looking at the value of the businesses, and probably taking more or less a Warren Buffett type view of the world. But he found this book value, and his claim to fame was actually from around 1974 to 76. He was a broker, the old school broker, but he was his own analyst. But he turned every $10,000 in the account turned to $1 million by 1980. And you can see it's not even that big a move here. You'd think we'd have to have a move like we had that, and then the success continued. He retired and went to trade for himself in around 1986 before the crash. But the point of telling you all this stuff is, to me, it does not look like what we could set up is some kind of very high consolidation. I think all of the stuff we're talking about on the infrastructure, these trillions of dollars that are going to be spent, they are going to be, I believe, supportive of the markets from the standpoint of what the trends are going to do. Well, this is counted as a wave 5. Like I said, I think there's a larger wave 4, and then the ultimate high of the markets. I know a lot of folks have talked. I saw something that talking about this 21-year cycle, and you can go back to all the way back to the bottom, and there's 233-day cycle lining up all the way right into 2021. This is the end of the road. This is sort of like the clock that this is like the world. What was it? The Mayan clock, that the end of the world was going to happen, and what was it, 2011 or something? And it's the same kind of thing here. You get into that type of thinking, it's, certainly anything's possible, but from my viewpoint, I've always been somewhat of an optimist. And what I really see happening here is that this market will consolidate. You've got too much money coming into the markets unless something just gets crazy and we end up into a complete civil war or something here in this country. We're going to most likely follow along the lines of what I'm seeing here. And I'll just mention this real quick. You have to realize that guys like Ray Dalio is a brilliant guy. I've been a fan of Ray Dalio for a long time, but everybody's looking at the markets right now at these lenses, and this is part of the video I'm doing right now. They're looking at the market through the lens of the old school capitalist model. And what's happening is there's a new school happening, which is the MMT, which is the printing, it is the infrastructure, it is spending trillions of dollars. And I really believe, listen, this is not, I'm telling you, it's not a political statement, but I do believe that the current Democratic Party wants to spend and put all these monies in place so they get credit in history for doing this. Now, whether that credit ends up to be a positive one or not, we'll find out. But they want that. They want to spend the money. As I said early in my opening comments, the markets and the economy and the U.S. infrastructure completely needs to be rebuilt. I mean, it's like still, you expect to see cowboys on horses compared to other parts of the planet. Europe is even worse. But, when you look at Asia, other developing worlds, they've got the opportunity. They've got a clean slate to do this. Much harder with as big as country as the U.S. is to do this. But this is the plan. And that plan suggests, and I've told you on these streams over and over again, that I believe that one of the inflation hedges will be the S&P 500. And I also joke all the time, if you want to be right, all you have to do is fade guys like Harry Dent, Peter Schiff, those characters, and you'll be just right most of the time. I happen to be a bull on gold longer term, so I'll probably align myself with Peter at the moment, but he's always bullish. But like guys like Harry Dent, he's telling you 3 months ago, I saw this, something I ran across, and he's telling you 3 months ago to sell stocks and buy bonds. And so the buy bonds worked really good, but you could have kept your stocks too. The point is that you just we're in this place in world history. I'm too old that I won't get to see this. A lot of you folks will get to see the outcome of this stuff that's going on. We could call it craziness. I'm just going to call it a shift in how the world is looking at the economy, and that's fine. I mean, if you look at the economies, they're supposed to evolve. They're supposed to change. You're supposed to adapt. That humans are supposed to adapt. So we'll see where this takes us. I'm not making any long-term projections other than the fact that I don't see a top in this market, and I continue to see that impetus that we see not just from the Fed. And I told you folks, if you went back and watched my videos a year ago, March, April, May, I was telling you then what they need is the Treasury or the spending side of the equation to be partners with the Fed. Well, they now got that. I mean, if you see some of the comments that Janet Yellen was making today, she's had an interesting career. she worked in the Clinton administration, but she's never really put out a lot of political views. Now she's got the platform to go with the political views. And they're playing. We all know how the world works, right? It's all fear mongering and clickbait and all that. But she actually said this statement. It was so amazing that I actually did a snapshot of it. I'm going to bring it up on my phone here. But it said her largest concern is what are the risks if we make these investments? Not what. Let me rephrase that. Her statement was, her concern is not what things could happen if we make this investment. She said, what is the cost if we don't? And so it's the same thing, right? Posturing against, well, don't worry about what risks there are, because the risks are bigger on the other side. But there's all of this stuff. There's no way to actually determine that. So hopefully I'll be on the planet long enough to see the outcome of these things. And I'm hoping it's positive and that all these things happen. And I think but the spending will continue. There's going to be winners and losers, and there's going to be a lot of folks to do really well in the stock market. And there will ultimately be some corrections. There'll be those type of things that always happen even in a capitalist system. We're looking at really a shift into kind of a mode of this expenditure, like almost we'll call it a socialistic democracy of some sort. And all of these programs are being pushed out that way. May be the best thing ever happened to the planet, may not be. We'll find out. But what will be is that folks that have money will continue to make money and will be able to participate in the evolution of the market. And the funny meme of stocks only go up. There's a lot to be said for that. If I zoom out just a little bit on this stock, I mean, from 1942 to 2002, there's a couple hesitations, but basically it's a straight line. And that is how it goes. And the markets are engineered. They're engineered through evolution, through basic innovation, changes of industries, changing of guards. The Dow Jones used to be the Dow Industrials. They still call it that, but there's really no industrials in there. There's some, but those are the old guards, right? So anyway, evolution. I'm getting a little philosophy. And I'll be going through oil here in a minute, but I just want to talk about, because listen, I cover all this stuff every day on the short-term stuff, but this is just to dig in a little deeper with what is happening on the longer-term charts, but also you can tie this together. Those of you that are familiar and subscribers and been around this channel, I talk a lot about reverse fundamentals. So if the fundamentals say things are going to happen, let's say the charts say this is going to continue, so what are the fundamentals? What things would have to happen for that to continue? And one of those things is going to be infrastructure. Infrastructure does not add a lot to the GDP. It really doesn't. There will be jobs created. There will be other things that happen, but there's the effort here is to completely restructure the economy. Maybe it works. Like I said, maybe it doesn't. I don't really have an opinion on that. I'm an observer of what's going on. Yeah, so let's see here if I can just talk about just one more thing on this long-term chart is I'm going to go back over to TradeStation here, and we're going to go long-term. Let me go to SPX. I'm going to go to a monthly graph here. I'll bring it up full screen so you guys can see it here. especially when I get on SPX, that'll be helpful. There we go. So this is always the concern when you're looking at these markets. When you look at the minutia, you look at the short-term charts relative to what's going on, you don't see this parabolic curve as much. You know, we've been talking about the last several couple months, we've been in a sideways range, but it's edging higher. When you look at it from this viewpoint, it is absolutely vertical. And the question always comes in, well, how could this continue? And one of the things you folks know, these PPMs that I have on here, I talk a lot about the angle of attack. Let me draw in one last thing, and then we're going to move on. So the angle of attack is the angle of the moving averages. And if you, hopefully one of these days we'll get my book out, we'll get the masterclass out so you can understand this. We'll finally get the PPMs out on TradingView. Those kind of things will happen. But for now, I'll just give you a quick lesson on these things since you see them every night. And if you do subscribe to WaveTech or to PX, then there's some things there. But this is really these angle of attacks associated with the moving averages. And this has really been my life's work going back to 1983 or so. You really have, what I've been doing is I look at moving averages. So when these angles, I'm drawing up this angle here, when we're looking at an angle of attack where the moving average is going up, it's actually an aviation theory. And if you get too steep, then it stalls, right? This is about as steep as you can get. And what it tells us, if we ultimately go sideways for a few months, a couple things are going to happen. Is this 10-period moving average, which is vertical right now at nearly 3% per month, when that starts to flatten out, when it's going to have to drop well under 0.5. So that's a big drop. But what typically will happen, it'll just roll over the top, it'll flatten out, and the probabilities start to expand for the market to trade below those numbers. Right now, that number is 39.22. It looks like, let me double check that. 40.36 is the number. And so that is jumping right now. We just jumped to the next month. It was 39.22 last month. Now it's 36. So we're going 100 points. It'll be in September. It's going to be 41, 42, and so forth. So in 3 months' time, if the market were to go sideways, we would have a couple things would happen. The rate of change would start to bleed off of that 10-period moving average. And when that happens, it tells us that that value of that moving average becomes, there's a higher probability that it will be penetrated. This is the whole basis of the work that I do. And it is around moving averages, but it's understanding moving averages and trends within moving averages that dominate what's going on in price action. And as we're going through this type of sequence, the last time we got anything like that was around 2018. We were vertical. We went sideways for 5 months. We had that fourth quarter snafu, if you recall, in the fourth quarter of 18. We got hit pretty good. Market stabilized, ended up going higher. And of course, you know, the only reason why this market got disrupted at all, you could draw a line straight through this thing. And as a matter of fact, let me just draw that in to bring this point full circle. So if we were to go back here, the angle of attack was basically like this through here. And I'm just redrawing this. And it changed a little bit. But what's happening is that when we came up to this level here, The only reason why they got cracked like they did was because they shut the economy down. Had that not, we just ended up back to where we were supposed to be anyway. That's really what's happened. The markets, the entire shutdown thing was a hiccup from what should have been. Okay, we ended up going right back there again as far as the market just corrected itself and it's right where it's supposed to be. So we were going here anyway. I remember talking back in 2020, I had projections for the markets to go to 4,600 back then. So we're still working our way 46 to 5,100. But the point is that we will get to this rollover. We will get to some sort of correction. And on a long-term basis, when we live through on a short-term basis on the long-term charts, it's going to feel fairly dramatic when it happens. And there, a 5, 8, maybe a 10% plus correction is going to feel pretty crazy at the time because the numbers are so big as well. So we look at the percents and the numbers, it's going to get really, really big. So anyway, the point is that we are still in this uptrend. There are absolutely no signs. The PPMs are really at this critical level where we're going to start to see some things. I'm watching this closely. We just started the month of August, so we're not going to get another real read on this thing until the end of next month. I've been targeting somewhere late September, maybe October is when we're going to have some real metrics, and that's also when it coincides with everything I'm talking about from the standpoint of the economy slowing down, and whether it's because of Delta, because they're shutting things down again, whatever it is. There's a lot of talk out there. I don't have. I always say I don't have a crystal ball, but I do have a crystal ball, but it doesn't work very well. And the point is that what we get to do here is just kind of watch all this stuff. So, okay, I think I went on enough of a rant. I haven't done one of those for a while. Let's see here. The movie Tron, I love it. Yeah. Anyway, like I said, I brought in this new my old studio. I ran ran this thing for years on this thing. So anyway, let's go over and take a look, and let's dig into, I think, the next place I want to go. I'm not going to go through longer term aspects of the NASDAQ right now. I think I'm just going to basically move on. We're going to go to interest rates. We spent just the better part of an hour talking about all that stuff. So let's go ahead and let's start to talk about the 10-year. By the way, I did want to mention on a short-term basis, we did get that RTX sell signal on the cash. I talked about that in last night's video, and so we did get some weakness, but it's not going to be material. So here we are. This is actually, this is okay to start here. Let me zoom out just a little bit. This is the monthly 10-year. We're coming into what I believe some pretty we'll call it 110 is going to be a big number. We printed down. I'm going to show you on the daily. Let's go over there quickly. On the daily, we actually spiked down to 1.129. Last, what was that? About 2 weeks ago, we printed down to 1.28. So we actually came within one tick of making a new low and then reversed back up to the 1.18 right now. And I've been talking about this. If we look at the PPMs here, we're really looking at them. PPM2 is turning up, PPM3 is turning up, PPM1 is still under pressure, but just a couple more days sideways, and we should see this thing, and I've talked about this, come back to about 1.25, 24 to around the 1.3 number, and that 1.3 number is coming from here, which is that 40-week moving average. It's right at 1.314. It's still rising in the pattern. So I do expect to see this thing get back up toward that number. We have seen a lot of downward pressure build in the 10-year. There are people that believe the bond market is going into a bull market again. I don't think that's the case. I think we're pretty much played out here, and that action today, I think, really tells a pretty good story, but we're going to have to hold that number, and I'll be talking about this off and on the daily streams as we go forward. Let's go real quick over to just the yield curve. I've been discussing that. The yield curve is really going to be critical going forward in figuring out what the Fed's doing. I'm also going to talk about the reverse repos. But this yield curve, I still think the Fed wants to move this thing back. I put a cursor in here. Wants to move this back to about 1.3, 1.33 on the 530s. On the 1030s, we're steepening a bit. My focus is on the 530s. They flattened a little bit here today, but I think they will continue to steepen overall, like I said, just a little bit. I don't see them flattening out much more. And this is big for the banks and for the financial stocks. And that spread is where the money's made. So the steeper this spread to a point, the banks can make better money. So this is a very healthy level on the spread, but 1.13, maybe a little bit more up to 1.5, 1.65 would be the ultimate desired from the financials and the banks making money. And those of you that maybe you know, maybe you don't know, but I spent a really good part of my career in working with banks and institutions. Prior to starting the portfolio manager company, I was doing something called the Daily Quant Fixed Income Report, and we only worked with major institutions, all the major banks, proprietary trading rooms, and I was a research source for them. But primarily what I did was spread trading and helping them to manage their risk, and we did a lot with actually helping them to position buy-side hedges and short-side hedges. That's where the market grid came from. We were working on locating the best place to put a short hedge or a long hedge on whatever the institutions are looking to do. And that little edge doesn't seem like much to come close to that S1, R2, but when you're moving literally billions of dollars and hedging major financial books of business, those little ticks mean a lot. And so that's what we were focused on, but that's why the market grid came in. But this is the thing I've told you folks before about the banks, is banks don't take risk. They're not in the risk business. They have a trading arm that they have, but that's a small piece of what they do. Banks make spreads. They are going to take advantage of spreads. That's why these yield curves are important. That's why you hear people talk about if rates go up. What they're really saying is if this yield curve expands, there's going to be more profitability in the financial sector. So that's why I spend some time, and from time to time I'll talk about this. I have a lot of expertise and a lot of experience in this area and working with banks and trying to get their spreads, internal spreads. This is what the market's doing. Well, there's a way to position yourself, whether it's a steepener or a flattener, to take advantage of either side of the curve whether it's a hedge side or a place where you can add alpha. That's what they do all day long. That's all they do. These very big, large trading rooms. And so anyway, but that's the important. So let's talk about the reverse repos for a minute. And I discussed this a little bit, I think, on a live stream last Wednesday night. It was a brief one, but the reverse repos are not a big issue here. I know a lot of folks are. It makes for a good headline for a YouTube video or for clickbait that there's trillions of dollars being done here. But you're looking at a book of business on the Fed that is really, really huge. Almost $30 trillion, right? So you're looking at day-to-day operations and doing what they do with the spreads and coming in. All they're doing is taking excesses out of the market, and they're actually, it's almost like a shadow taper, if you will, but it's not big enough. I would say it would have to get in the excess of maybe 3 trillion for it to really be a big number. Right now, they're just managing little excesses in the markets. I used to watch these guys every day make it. There's a couple elements within there when they go in and do the reverses, or if they just do repos. There's stop rates, where the average price, all kinds of stuff to look at there. And it's very technical. And if you were to work on the Fed funds desk in the New York Fed, then all these things would mean something to you. But this is really what's going on here, is really just that management of the financial system. So I always look at it, you got a Ferrari and you've got all the gauges on here, and what you can see then is actually the markets where they are positioned at any given time. So they're just adjusting that. So there's nothing to read out of that at the moment, not from that standpoint. There are a couple actions that would be interesting, and they have done this over the last year. There's something called buying all coupons, or buying all maturities of anything, or selling them. If they're selling, they're taking money out of the system. So that's what the reverses are doing. And if they're buying, they're putting money in. So this is the way it goes. So it's just a normal operation. There's nothing there. There's no there, as they say. All right, let's go back over and kind of move through the spectrum. Take a quick look at the markets. Still down 11 handles. We're right at that 404. We managed to get up right to 405.75, and they backed off. This is going to be an area of consolidation as we go through the session today, to see if we can get a breakout of this thing at all. All right, so logical move here is to go to the dollar, and the dollar continues to look bullish to me. We saw that reversal last week. We came right into the moving averages. We came right into where we needed to, and I talked about this last week. We had the PPMs are in very positive mode here, and especially PPM 1. So that's going to keep an upward bias inside of this range that we have here. Let me bring that up for you so you can see it. I think I have a zoom on this thing. I do. So the key number on the downside is this extreme, this 91.69, 91.46. Let me get over on the actual where there we go. The high today's been 31. This is the weekly. So if we look at the weekly range right now, the high's 92.31. R1 was 92.34, and S1 91.92. So we've printed basically R1, S1 on the week. We went through S1 a little bit, but there's enough positive formation here to keep this thing moving higher. And the thing that I really think we're going to see is we're going to move toward this 91, let me get the right number here, the 94.82 number, which is going to get us to the 200-week moving average. I've been talking about this for months. We made a run at it over here. Now, this whole pattern now is setting up for a pretty good run. I think we still see a run up toward the 94.80 possibility of really breaking out. And I talked about this before because we're going to go from here is we'll go to the gold market, and I've talked about this as well, is that what we're seeing from this standpoint is that I think gold and the Dow are going to go up together, and this has happened many times in the past. I know it seems orthodox, Dow down, gold up, not the way it's going to be. The Dow, like I said here, to me looks very positive. I just don't see the negative. The Dow is going to collapse. We'll call it the Peter Schiff. Dow is going to collapse. And all of these terrible things are going to happen around the Dow because we're printing all this money. The reality is we're still the reserve currency and all that stuff. And I had a big debate with a buddy of mine in Switzerland several months ago that was going to change. It's not. It's sort of like there's not going to be any fossil fuel vehicles on the road anymore after 6 months. So that's not going to happen either. But the point of this is the Dow looks pretty good. I'm just going to put a monthly graph, even in the smaller version of this. Just real quick question to you guys. When I'm on this, is there enough that you can see of this chart that you can understand what I'm saying? I don't want to be on screen like this and you can't understand it. So let me know about that. So I just put up the monthly graph here, and the monthly tells the same story, by the way. We're trying to turn higher. And there's some key numbers. I just mentioned them, 93.99, 94.38, and then 95.26. So those are going to be big resistance numbers, but I also think that the Dow will continue toward that level. Yeah, okay. Yeah, so I'll go full screen so you can see this stuff. So, in fact, I'll even zoom in on this thing just a bit here. I know that'll work. So, what I'm talking about here is this formation here. 95.26 is the high end of the number right in here. We're going to most likely stay sandwiched between the 10-month moving average, 91.47, and somewhere between 93.99 gets into that 94 handle I've been talking about for a while, and then the 91 handle as well. So we're definitely looking at this market just kind of remaining in this range, but have a slight bias to the upside. Don't see any extreme downside in the Dow at all, especially with the position of these PPMs on a monthly basis, just going full screen so you can see that. The entire configuration is really what you're looking there is all of these things have turned up substantially. What's even more interesting is the very bottom indicator is it's called the WaveTech 200, and it's actually a valuation of what's going on within the 200-month moving average. So it's very long term, and it's like just turned up sharply. It's starting to roll up, and typically, if I don't have enough data on this chart to calculate it out far enough, I possibly should put this on TradingView. I think there's a little better data than on TradeStation. So, but this pattern is clearly turning up, and if you were to extrapolate out, it probably comes right through. We've been kind of on either side of this 200-month moving average over the last several years, actually over the last 10 years. So this is kind of a pivot point, but we're also seeing it turn up, which is pretty good. All right, so let's start to move down. We'll do gold next. I want to start over at the daily, and and I know I cover this every day. I don't get a lot into the details. We did see a spike, same number I've been talking about, 1835 high. We got that spike. Told you there's going to be a ton of resistance there. Well, it definitely was the case. We saw the market just reverse off of that. I bet if we put up let's put up a 5-minute graph, we'll be able to see this pretty good. Yeah, here's the intraday. Talk about the resistance. It rolled over and then just collapsed down, and you'll see the PPMs all started to roll over right here when this thing was big time on a rollover. So this is a 5-minute graph intraday, and you can see that this thing is it cratered out. Now it's in. I talk a lot about these contracting market grid, even on a 5-minute. This typically looks like we're going to try to turn back up, get back above around 1817, back maybe printing up towards 1820 here. We'll see how that plays out. But let's go back and look at the daily. And this is like watching paint dry, with the exception, PPM1 is trying to turn up right now. It's very close to breaking out. We need to stay above we need to stay above the 14 level, right where we're trading right now. A close above 18 to 21 would be desired on a daily basis. That would start to flip these PPMs over. We go to the weekly. I'll go through a whole spectrum here real quick. Weekly I've talked a lot about this pattern. We still have some downward pressure on the 10-period moving average, which was at the 19 level. As I said, we printed up to 35 and low 08, and I continue to expect to see us hold above the 1800 level during this pattern, and we need a close above that 1825 on a weekly basis. So it's Wednesday. We need that on a Friday. Last chart we'll look at is the monthly, and the monthly is interesting in that we're starting to get across of the 21 and 10-period moving averages, and when that happens, typically that will be somewhat of a bottoming pattern, but it'll take probably another month. So we could see, just projecting out, there's a possibility of printing down into around 1786. I still think, as I just said, 1800 will be the magic number. We look at last month's low, 1770. So like I said, this 1786 is the worst case in this pattern. And then the way this is set up, there's at least, I'm going to say, 2 more months of sideways. But this thing is coiling into what I believe to be a pretty big explosion to the upside. And I've been making that point for a while, and gold you have to be very patient with. I remember I was very bullish down in this trough here. This is monthly, 200-month moving average was there. We actually got a monthly cycle right where I have the cursor right now. This is that was a huge event. That started this move up all the way up to, this is the nearest futures chart, to 2108 high on the nearest futures. Now we're consolidating that move. We should have one more move out, which will ultimately print us up into, an all-time new high on gold. And whether that's a realization ultimately of the patterns from the inflation, all the stuff we talked about in the beginning, this infrastructure, inflation is going to be there. Just to kind of keep tying everything together on this stream, is while I think inflation is coming, I still think the S&P is going to do well in that environment. I think the bond market will start to increase, which could ultimately, if we do get yields back above, we'll say 160, 170, back in that range, that's going to make the financial sector, those small caps, will come back into play again. And I talked about this earlier in the year, is that we really need the yields to go up. We need that participation of those small cap stocks to make this thing move. And we've not, for the last 6 months, we haven't really had any participation. We early in the year, it was all about then, Russell outperforming, and we looked at that chart a little bit ago. It's not about that anymore. It's actually about the interest rates. So once that happens, then we could see that rotation come back in. Until then, I'm going to hang with the Fangmans and the NASDAQ. Just a perfect example today. Composites up 0.28, Russell's down 1.2%. So we're seeing it on the screen here as we speak. So you're really just looking at this entire platform here. You can see it right on this quote screen here. The Russell down 1.2, composite up 0.29. So there continues to be that going on. So back to gold though. I'm just looking at the quotes over here on the right, but this pattern overall though, I believe is going to be very bullish on the longer term, and this is just the consolidation of this run. I think and this is going to sound maybe a little, we'll say it's sound a little crazy, but I think that what we're looking at here on gold, I'll make this full screen. I'm going to draw something in here. So this pattern, I've got to move something around here. Hang on. I won't be able to move the screen down to where I'm going to draw, but I do want you to consider this is what I see is likely to happen down the road. The way the PPMs are setting up, they are setting up a major bullish pattern here. And this stuff, when you're looking at a monthly graph, obviously it takes 1 month to get a new calculation. And when you get that, this is what is setting up. So this pattern here is the preliminary move. I'm drawing up the arrow now off the top of the screen. This would be potentially a 1-2 pattern here, which is a wave 3, which would tell you, I can't get the exact numbers now, but I'm going to draw the lows and the high. You're looking at the potential for a minimum from this level here, roughly that 1700 low. I'll get the exact numbers in a minute. When I'm on this drawing tool, I can't get to the actual numbers. But what I'm seeing here is that this is going to be projected, this number up here, this arrow I just drew in, that's going to be a minimum of potential of 900, but most likely it's going to be a 1.382 or 1.618 times the length. So I guess in the end, while we've talked a lot over the last several months about the inflation, everything that's coming in, we're really seeing something interesting in that we're looking at the inflation is going to show up. Gold is going to be one of the inflation hedges, and it is going to end up to be quite bullish. Let me get those exact numbers now. I couldn't get when I had that tool up there. So that low was 1682. So let's do some math here. That would be a minimum 2780 on gold on that. So that'd be pretty big. So hang on, folks. I gotta adjust my camera a little bit. There we go. Making me kind of. I see what's happening. Okay, hang on here. Sorry about that. So, yeah, so this is big, okay? Also, it's a monthly graph that we're looking at. What's going to confirm that is a break over these numbers that we had that were just a few months ago. It's going to be that 1920 area. We get a close on a monthly basis over 1920, then you can start to confirm and project these things out to this level. So that is going to be very, very substantial from that standpoint. Yeah, so let's do silver. Let's go there next. Let's just bring up silver. Silver's got a bit different, but let's take a look. Silver has it is similar in this. I'll go full screen here so you can see this. As silver's got this, and I call this is what's called a dragon head. Let me just pull this over. So same type of scenario on silver. So answer is yes. And let's draw that in just real quick. Might as well go through the. Yeah, so this would be this similar pattern. So we'll call it, it's almost a perfect, could be an ABC that I just drew in, but it looks like maybe ABCDE pattern. You've got you see the market grid around here, you've got the wedge, and then you get the measurement up. So I'll get the numbers here and we'll do the same math on silver. But silver, very bullish too. But the interesting thing is, way over on the left-hand side, I'm drawing an arrow over there. That is actually where we got that huge RTX sell signal. This was when the Reddit crowd was trying to squeeze silver. And I remember telling everybody this is not going to, oh, now this is 11. The Reddit squeeze was right here. And I said, that's not going to work because it's a much different move. Let me clean this up so we can see the right arrows here. So this was the Reddit squeeze here. We've consolidated that, so we should see that go up. So there'll be plenty to play there for sure. So let me go back. Let me take this off. Let's get the numbers here. So the bottom of that run was 1232. The top was 3013. So we're just going to round to call it 28. The bottom of this this cycle is probably here at 22. So you're looking heading back to 48.52 on silver. If this pattern plays out, we're going to need the same type of things here. You're going to need to close above the 25.86 level. We're pretty close to that on a monthly basis, so that would be a long ways from here, 3 more weeks. But we can finish that up. We're going to start to see this thing move out. This is a classic market grid dragon head. The expectation out of a dragon head is that it resumes its previous move, which was up, and now so we should start to break out. Even if we just got I didn't even do any Fibonacci expectations on here as far as an extended wave, so we could easily take out, make an all-time new high here in silver as well. Yeah, and I'm just looking at, I think it's Mattis. Yeah, I agree with you on the, most people are not aware. I should say, many people are not. But gold, when you look at back when the depression was going on in the 30s, if you look at the gold mining shares, that's when gold went straight up during the depression and the deflation. So there is something there too, and that's really the big debate is this inflation, deflation, and you know, you, I'm still on the camp of inflation. I haven't seen the deflationary process start to out there, and it was kind of interesting since gold and silver and what we're talking about here has some relevance. It's interesting when you listen to Powell explain what inflation is. So inflation isn't that prices went up in the last year and they might stay up. Inflation is that they need to have, he explained, a process that now next year it goes up and the next year it goes up and the next year. So the fact that prices went up substantially, that's just a one-off event. That's transitory. And some things are going to come back in. We're seeing lumber coming in really, really good. I can tell you that I know some contractors, and they're not seeing they're seeing prices come down a little bit, but it's the lumber world is a lot like the gas world. You can't lower the price of the gas until you've burned off the old inventory. So until that inventory burns off, you're going to see lumber prices, retail and even wholesale, stay higher than what you're seeing in the futures market. So you're not seeing that same impact in the real world that really affects prices. Not yet, anyway. And typically what will happen is the cash prices will go down and then they'll go back up. And you know how it really works is once you've raised lumber prices, why would you ever, if people get used to paying a certain price, you're going to keep them there. So there's a lot of stuff that they're calling, air quote, transitory that is going to remain in the economy going forward. Wages is certainly one of them. A lot of materials, they're not going to go down in price. Once a producer can get the money for him, he's going to keep it there, especially on the retail and the wholesale side. They're going to keep prices where they can keep them as long as they can keep them. It's just that's the way it works, right? So, but I think this silver situation is pretty bullish. What I'll do next, let's see what time we're getting to be. It's about an hour to go here in the stream. So I think what I'll do next is we'll delve into crude. I think the action in crude is kind of interesting, and yeah. So yeah, Christoph, you're right. That's what they're trying to get. Focuses on rate of change, and guess what? The rate of change is I lived my life in that world, and that's what the angle of attack is all about. Is that flow? So if the rate of change, yeah, that is what's going on, and it's going to compound itself. It may maintain, maybe fall off a little bit, but the reality is anybody. I just talked to somebody the other day, and they're one of our clients, a retirement client. They've actually seen hundreds of dollars dissipate just through their grocery bills and the gasoline, and they live on a fixed income, and it's very, very difficult. So those are the people that are really feeling it if you're on a fixed income and you can't get there. Yeah, and David Nesbitt, yes. And if you would have known me in that level, I was not an inflation person back in those days. Back in 7 and 8, he was talking about 7 and 9. Yeah, they were talking about all the QE was going to cause this, but that was $1 trillion. We're now talking. Right now, we're getting close to 8-9 trillion. So these numbers are going to continue to impact things. So think we're in a different place. We'll see how it all plays out, and maybe in reality everything, if it wasn't for all that, we would have been in the greatest depression of all time, and Peter Schiff would have been right, and Harry Dent would have been right. Everybody would have been right. So all they've done is maybe flattened it as much money as they're pushing. We're going to find this out. But listen, what we're really trying to figure out always is where we should position our money, how we should do things. That's what, for most purpose, that's what my company does. I'm sitting here talking to you folks on YouTube, but what we do is we manage portfolios, billions of dollars of money in portfolios. We help investment advisors and individuals and people to help do that through the software, through positioning. And most of our stuff is still 60 to 80% invested right now. And that's part of what I continue to talk to you folks about. That's why I show the database every day, all that stuff, sales pitches, $3.18 a day. You can have all these access to 16,400 buy and sell signals, plus you can build portfolios and do some really cool stuff just at our WaveTech product. So, I mean, that's really what we're about. And, when I go into this in-depth analysis like this on these long live streams, this is about perspective. And, I've always done these 1 hour deals before the COVID thing happened and the YouTube channel got visible, and we started getting, tens of thousands of views every day and all that stuff. Things have come down a lot. This is all about servicing our clients, giving institutions and other folks that are trying to manage your money. I'm not joking when I said we're here to help you manage your portfolios and protect your wealth. That's what it's all about. And 2007 and 8, I was one of the first guys. I was right there with all the guys like in the Big Short, screaming about these mortgages and what was about to happen. And I tried to explain to everybody when Bear Stearns, when those funds blew up, that everybody had the same position on, and they were all going to go down. And it was a very interesting time because our software actually, by the time we came into 2008, we were 60, 70% in cash in our portfolios. The first week of 2008 was an 8.5% decline. And so fortunately, we were in cash heavy throughout 08, and we re-entered back in February, March. We started buying some things, and in April, we were buying both hands in April of 2009. But as far as the inflation expectations go, the jury's still out, but it sure looks like we're going to find out, and this is what I've been talking about, we're going to find out about this stuff as we come into, Q4. I think we're going to know and see the metrics that are going to tell us whether that rate of change is going to continue and inflation is going to continue to expand and what's going to happen. I just read an article the other day about some of the supply chain issues. They're not getting any better. So, maybe we're fortunate that nobody wants to come back to work and do things. And because if we had the full reopening of the planet, we couldn't deal with the demands, which is really odd, right? Because we could before this, but now we can't. So it's very odd. And and this is very true. What Christoph just said on the chat line is we are in a very different environment. This is my argument against the 19 guys like Ray Dalio that say we're going to enter into the worst thing since 1929. No, we're not. And that's what I was ranting about early in my stream here, is that what we really have going on here is that's an old school things. This happened in 1929, and I know Ray's hung up on this debt cycle and all that stuff. Well, the debt cycle doesn't even matter anymore with MMT, and they're going to play this card as far as they can until it breaks or works. We'll find out. And Japan is the model. And, and if you haven't watched the Princes of the of the yen, princes, not princess, princes of the yen. Watch that video because they talk about what happened in monetary expansion and all the things that Japan has done, and Japan is the model. Hugh Hendry was one. If you're familiar with Hugh, Hugh was one of the. Maybe we should do a video one day, and I'll play what Hugh said at my conference at 2010 for institutional customers of ours. We had about 300 people in a room, and Hugh was my keynote speaker back in 2000 and I guess it was 2010, first quarter of 10. And it's interesting what he was saying then, because even then he was saying we're all turning Japanese, and we did a lot of things that narrative that he had weren't necessarily right, but the big picture was absolutely spot on. And that picture is just going from what we were just lightweight then. Now we've expanded it, and Japan continues to be the model for a lot of these central banks. So the BOJ is definitely on the list of key players on the planet. Yeah, just reading what David said. And matter of fact, David, I owe you a phone call. I want to talk. I think we have your info. I need to reach out to you again. I was thinking about you the other day, actually. No, I appreciate that comment. So I've got lots of activity outside of my office here. So, yeah, so the Japanese model, whether it's successful or not, is important. Man, they're coming right by my office. They're right here. They're not coming here. So, anyway, yeah. Bear with me 1 second. Mike, it's very frustrating. Sorry about that. Anyway, let's keep going here. But, I think we get into this inflation conversation here because of what's going on. That's the $64 question I used to say. It was an old term, right? That's what's going. That's if you can figure out that answer, which way it's going, then you're going to make a lot of money. And this is the misconception, I will say, is that you don't have to figure it out today. You just have to figure it out. You can be late to the party and do fine with everything. So I'm going to, what else we got to cover here? We did the dollar, we did gold, silver. I guess let's do Bitcoin and Ether real quick, and then I'm gonna don't give me the stocks just yet, but we'll go through some individual stocks, and then we'll watch the close together and call it quits. But thanks for hanging out today, folks. I mean that. I miss these things. It's been, I don't know, maybe 5 or 6 weeks since we've done one of these. Crude oil, thank you. Thank you. Let's do crude first. Yeah, crude is just getting absolutely hammered. They're trying to make Kathy really look good at $76, right? It's like every seller in the world was right there at 70, 76, 71. But there's some other things going on here. So I've got the monthly up. Let me go full screen so you can see that. So the monthly grid, we're at the bottom end of this range. 67.33 is S3 on the monthly basis. So we're still within the constraint of what's likely to happen here. We still have some crazy bullish, this is a monthly graph we're looking at. The monthly graph, like I said, S3 is 67.33, low so far 67.85, so we're pretty much at the extreme, but let's look at the PPMs here. The PPMs are really strong, up 5.57, up 0.46. I'll break this down here. And then the 40 is down at 0.36. So let me unpack what that means. So we've got a very strong, the 10-period moving average right now is 60.88. It's going up $3 per week or per month. So when the clock turns over to September, $63 is going to be your major support. You're also crossing through the slow moving average, which typically will set up a consolidation phase. So I'm going to argue that we're going to be absolute bottom end somewhere around 63. The extreme would be $59 on the downside, but most likely we'll stay within this grid. And if we stay here a long ways, we've got 3 more weeks to go, 3.5 weeks to go through this month. So I don't expect to see anything really material happening here. Maybe we even get a STX buy signal. That would be a close on the end of this month of August below 65.29. We get that, then you're going to see that will be a bottom and we'll come back into range. But I think what we're seeing here is a consolidation between the upper end of, we'll call it 70, R1 on this is 76. We look at the high 73.95, so we didn't quite print an R1 yet, and we have printed an S3 just about on this. Let's go backwards just a little bit. We'll do a top down. So we're sitting here on a weekly basis. 68.63 is the extreme or the STX. We have 66.94 is the 21 period moving average, 66.94. So we are most likely at an extreme. Looks like on weekly, monthly basis, we're pretty much there. Should see a rebound. The only thing that's happening here on the weekly is we're seeing the PPMs roll over on an intermediate basis. Once again, just sets up that zone or that sideways range for the 63.59 level that I was talking about earlier. If we look, the 10-month moving average, the 40-week moving average, 59.54, and then you also have a 200-week moving average sitting there at 61.13, and that's been your dividing line. So we've spent below it, now we're back above it. So the really big number is going to be that 61 handle for crude. And like I said, the PPMs on an intermediate basis are rolling over a little bit. Let's take a quick look at the daily. Daily sitting here right at 68.07, low 67.05. So we could get an STX buy signal. You might want to mark this down. 68.07 or lower close today would suggest we'd move back toward the probably 68.65 to 69.90 level over the next day or two. Come back into this range. PPMs are negative, so all of the resistance on a daily basis now on a short-term basis is at 71.73. It's a cluster of numbers there, 71, 73, 65, and 90. So those are going to be your clustered numbers right there. Yeah, so when do I think we're going to hit 90? Probably not for a little bit, but I still think those longer term trends are in place as far as that goes. Okay, so let's go into Bitcoin. I know Christoph's still telling me about 20,000, not going to happen. We got a dragon head here. I think I talked about this the other night. This is the daily. Let's go to weekly. We should head at least get sandwiched between the 10, 36, 241, 44, 422 is probably the next target. We managed to get up last week to the 41,806 level. A really nice, huge outside reversal bar confirmed by the following bar. Should get at least 2 more weeks up. Probably going to be capped out at that 44.23 level, right at that point. So what we're seeing here is the ppm 3 is 2 is down, ppm 1 is up. So we have a 1.4 ratio on ppm 1. So 36,243. You see that number, you can certainly trade off of that number if we get down there. The low so far this week has been 37,423. Let's flop over here and get to the daily real quick. And daily setting up also a very bullish pattern as well. And this is a nice, this tells us everything I just said. 44, the projection for this is at least to get back toward this upward sloping 200-day moving average. 42,529 is going to be a magnet for this thing. So we're going to continue to see this. As far as the day goes, we're sitting here, 39,821 is the RXT number, 39,777 is the number so far. So we traded up to that. We'll see the market grid turn up tomorrow. ppm 1 is turning up, accelerating. ppm 2 and 3 all in trend level up. Okay, so this is this is a pretty good pattern looking. So let's go over to Ether. Ether continues to have these crazy volatility spikes. We're breaking out again. 26.59 on the daily. RXT last trade 26.97. So we finish above that. We're probably going to come in and go sideways. But here's the key number: the 10-period moving average has got a rate of change, or the ppm is at 3.32, and that said that there was less than a 10% probability to actually usually trade below that level. So let's look at that. 23.38, the low was 24.55, so we came close to it, and we just screamed out of there. We got a reversal bar. We close up here today, even though we'll get probably get a couple of days sideways. We should continue to move higher in this. Let me just see if there's any Fibonacci numbers out there. Yeah, there are a couple here for this. We're looking at 24.29, 27.01, 28.69. Yeah, I just wanted to flip back to Bitcoin, see if there were any numbers out there or not. Okay. I'm just going to look at a comment here. IWM, STX buy, not yet. Yeah, this is going to be a tough market, just going through the analysis that I did. I didn't really go through the Russell today, but this is, everything's trying to roll over again here. All right. Yeah, so let's do this. 1218, let's do some individual stocks. And I'll do Robinhood. All right, let me get through some of these that you folks have suggested. I'm actually going to start off with Robinhood. There's going to be nothing really to look at here. We should have for the WaveTech users. I don't think it's in there yet. Hang on. I'm gonna go look at a symbol here real quick. I've got. Oh, it is. I do have it in. Okay, cool. There's one bar. Hang on. Let's go daily. Yeah, not much to look at in Robinhood for sure. I can't even consolidate it. So 3 bars. Interesting thing is, and this is worth talking about here, folks. So we got a buy on, you'll see a green dot. I know there's only 3 days of trading, right? So we built something in our software that gives us the ability to run our algorithm after literally the second day that a symbol ever has traded. We can actually generate buys and sell signals, all that stuff. And we'll tell you whether it's a buy. So yeah, we can look at hourly, but I just want you to see this, is that we were able to pick this thing up, and the buy was for this morning, interesting enough, around 38, which was the offering price. So we'll go back to TradeStation. We can look at an hourly graph here just to get a feel for a couple of days here. There's a little bit to look at. Let me see if I can zoom in on that. Might be a way to do this. I can't get it on the screen in Zoom. Sorry about that. Try one more thing here. There we go. So you can see this pattern that's set up. It was interesting that this is an hourly graph that we're looking at. We're looking at the big spike this morning. And actually that buy signal I was talking about was yesterday's open, okay? So that's when that came out. Is we haven't, our product actually does end of day, so we don't have today's data in there yet. So but we did get here on a hourly basis, we got one of those RXT sells. We went 2 hours sideways. Usually it's 2 bars, and then we resume to the upside. So not much to look at here. There's no indicators. Maybe even going down to a 15-minute might be, give us something to look at here. Let me go full screen. But yeah, so you can get a little bit of feel. This thing's trying to roll back over some really, since there's not a lot of action Yeah, I never use volume weighted average price. No, no, ever, never. You guys have to realize that I am old. I am old school. I love bar charts. I don't like candlesticks. I get much more information looking at a bar chart for me because I've done it forever. I've used candlesticks. I've done all that, but I just don't see the use. And I hate anything with volume because volume is irrelevant. And I say that people will argue with me forever. I've been arguing for 40 years with people, and volume doesn't matter. And I won't go through the educational part of, I've done it before. That's probably a clip we need to harvest somewhere. I need to go on that rant and explain to you what makes markets move, and it is not volume. Okay, so we'll talk about that sometime. But yeah, so this pattern, I mean, what can you say? It's 15-minute chart, not a lot out there to take a look at. So, but as far as it continuing, that's anybody's guess. Like I said, we got a buy signal on it. It's going to be very similar to that. I'm going to go GME since we're on there. And we're on 15-minute. Let's get over to daily GME. And you know, I've argued about this stock for a while. That this company was changed forever by the events that we saw last winter. That was not only did they get changed, but they got changed for the better. They're now actually have a company that has money. Whether they can do something with it or if it's a slow death, we'll find out down the road. Yes. Yep, I think you've been around the Anubis. I think you've been around my channel. It's the aggressive of the buyers and sellers that move markets. Yes, it is. So, yeah, so nothing really here that I see, folks, that even there is actually some downside objectives here, 126, 99, 83, whether we're heading down there. Market grid, I mean, this is pretty tough to read here. Let me try something here. There we go. That will help a little bit. But we have negative PPMs. We're definitely in a downtrend on this stock. And it looks like it's likely to continue. Minimum target, 126, we'll call it. All right, so let's get into, I'm going to do Tesla. I've got my own little list here that I want to cover because I talked about Tesla last Wednesday night, and I was talking about this thing going to around these upper levels here, getting above the, let me get the right numbers up here. Once we got above these 700 level, we should be able to run to the next level. We did hit some of the objectives that I talked about. Those objectives here that are on screen were for 694, 721, 739. I remember talking about those. This is off the daily, so we've definitely printed into that range. We've seen 626, so we've met that target of 721. I said 6, but 726, and we've seen 721. Let's go weekly and see if there's some other things out there. Yeah, so this was we got a cycle low signal way back on 625. Now we're seeing this thing start to break out. Targets on the upside is 788, 880, and right now 937 is the Fibonacci targets at the moment. And a close on a weekly basis above the 715, no, hang on. Close above 700 this week is going to be very bullish and should confirm those numbers that I just mentioned. Volume is not a proxy for aggressiveness. Incorrect. He who has stood in many trading pits and seen a lot of volume and prices not move. So anyway, I need to do, yeah, that needs to be in the master class. It will be, actually. So that's Tesla. And I know this PLTR is, somebody just asked for it. It actually almost printed down to 15. It got to 16 overnight in one of those crazy sell-offs that we had overnight. But this, you know, this, I don't know. I don't know why. Maybe because it's, I just don't see a lot in this stock. It's sitting here right now. You got negative PPMs. You're in a downtrend. Cycle high came in on the 729, so 4 sessions ago. Let's go to weekly, see if we can find anything on there. Yeah, weekly. Boy, this is just terrible. Let me go over. Let's just come over here and sorry, folks, my computer is like locking up on me. So let's go to a weekly PLTR. There's nothing there. I'm going to have to bring this up on this platform. Yeah, so this gives us a little bit, we're just kind of flowing. I just wanted to see the PPMs on PLTR. We're basically neutral on all three. Longer term, there is a slight uptrend on this stock on a weekly basis. I don't see, let me see if I can flip this to a daily. Daily, you can see we're starting to roll on the PPMs over here, starting to roll through the PPM first derivative. Basically, we're at that inflection point. If it takes out these lows in here, and I'll go back to TradeStation and get the exact values, but if it takes out 21, looks like 2148 or so, maybe even this one here, 2109, you're going to go down and retest this low here. So Kathy will have fun with that. She'll be able to buy some more. Yeah, I think that's a really good one. Sorry about this, folks. Nothing wants to work here. Yeah, so we expected this, right? That Moderna would be up, so we'll cover that. We're getting a potential for an RXT sell on a weekly basis. We've broken above that level, 410, the high so far. 433, 410.17 is the number. We close above that. Should see this come back in. But of course, the stock's going up, right? When you have, when you're a government contractor, you get to make a lot of money. Just trying to pull something else up over here. So yeah, let's just stay with these vaccine stocks for a second here. Let's go to PFE. So you can see the same kind of action. I'm trying to bring something up on the other screen. I'm bringing over. Bear with me 1 second. Yeah, I'm not sure. Are the earnings coming out after the close today? Is that what's going on? Okay, so yeah, so all the vaccine stocks are going gangbusters. I read somewhere there's 8 pharma billionaires out of COVID, new billionaires. So there's definitely some stuff going there. All right, let's see what else we got here. We're going to do some of the typical stuff. We're going to do Apple just real quick, run through that. I had talked about Apple moving up in the last several weeks ago, heading up toward these objectives, which are the objectives were 143 to 151. We printed 145 so far, so potential for another move up, and with the PPMs are just very solid uptrend here. We could see this next move on the upside hit some of these old targets that are still valid. 153.98, 168 is possible. So that tells you right there pretty much what direction the markets are doing from that standpoint. We'll do Disney next. I'm just going to hit on some of these stocks. So Disney has some interesting objectives up here, 209, 225. PPMs, however, are telling us that we're not ready to go there. We're going to need to close above the 180 level to really get this to break out. PPMs have got a lot of work to do. Look for more sideways. Maybe the key level on the downside is going to be, hang on, it's going to be 166 even. You take that out, then that's not a good sign. That would spell big trouble. I don't see that happening, but that's your key pivot on the downside. 166 target, minimum target 209 on the upside. So definitely a good risk reward ratio there. You know, I remember on Wednesday last week, I did Boeing. We're continuing to see Boeing just in this consolidation range. We're trading right around this 226 level. We're right at 226.88. That's your 40 period moving average. This is, this is, I guess if you're going to be in the airlines, this is probably one of the better places to be. The people buying airplanes, maybe, you don't want to be in the airline business. The airline business is pretty tough. So let's do some chips here. AMD, we'll do that. We'll do Intel. AMD is just skyrocketing. AMD is like, I think I told you folks before, but AMD, when I used to trade on the Pacific Options Exchange in San Francisco, AMD was a really good trade. Back in those days, they were always being sued by Intel. Intel was trying to sue them out of business, always claimed all kinds of infringements on technology and everything, and they'd be in a lawsuit. AMD would win, and then the stock would go from like 12 to 22, and it was just back and forth. It did that probably for 2 years. It was an automatic trade, and you could position yourself on that range. It was just classic. And so what's happened, though, is AMD has become, their chips are way ahead of Intel right now. Intel's had a lot of production issues. I'm sure you follow these stocks, you know that to be the case. So, AMD up 519, you got chip shortages, part of the whole disruption thing that happened, right? So you're going to see this continue. As far as I can see, this trend's going to continue. There's some old objectives, even though they were, looks like they were invalidated. The range on the upside or projections was originally 119, which we just hit, 119.71. Next range 137, 148. So I would think those numbers are pretty realistic as far as it goes, moving up some pretty good numbers. So if you own this thing right, I would not let them get me out of this, because it looks like this is a big trend, especially based on PPM's plus 4.36 on PPM 1, PPM 2, 2.13, and PPM 3, 1.26. These are big trend numbers. This trend is going to last for a while, and you might even be able to do like a swing objective off of the July of, what was that? Let me just double check here. Yeah, July of last year. And that's something I haven't really talked a lot about today, but our database is actually going through a minor rotation. I'll go through that in a minute, because I do want to bring that up. That's worthwhile. So we'll go through that here in a minute. So let's do Intel. We know Intel was just still in the hole. I mean, look at the contrast. Let me go full screen so you can see this. The contrast between the two of these things, right, is you're looking at Intel down on a day when AMD's up 5%, but this stock continues to hover right around 200-day moving average. I remember covering this literally months ago, and this thing is just, I told you then that the key was going to be the 200-week moving average. That number right now is, that average is 52.33. So we're just hovering along that. This would probably be a pretty good buy on this stock at these levels, but you're going to have to be patient. And it does have an upward objective of 76. So I don't know what they're going to have to do to get through some of these levels, but you've got downward pressure across the board, so not going anywhere for probably 4 to 6 weeks. Lots of consolidation. Maybe you can trade back up into some of these ranges here at 55 to 58 is going to be your major resistance, and I don't see getting through there. A lot of work to be done to get Intel to move. All right. Just looking at some of the stuff on the line here. Amazon, similar story. I'm sorry, didn't come up. Amazon hit its short-term objectives up here at 30. Let me see what the number is. Several weeks ago, 3,800. The top end range, 3,759. Satisfied that. We got a big reversal. Probably going to hang around 3,272 in here. PPMs are still positive, so there is some upward pressure right here. So this would probably be bargain prices, 3,272, be pretty good number. What was the low so far? 3,299. Yeah, so anything toward 3,272 is super bargain. PPMs are trying to turn up again here. Maybe we're going to go back in and try some of these projections here at 3,800, 4057, 42. They seem somewhat out of play right now. I would say it would be, this key level is going to be the 40. Let me get the numbers here. Key number is 3,272 is going to be the key number there. So we'll do Alibaba. They come out after the close tonight, or I'm trying to remember when they came out. I had them on a list. Don't have it in front of me right now. But we traded down almost to the objective. 173.81 was a downside objective. We got to 179.67. This thing's kind of a mess, but it looks like it's trying to bottom here, but most likely sideways with a cap around 219. That's about all I could say about this one. Here's NEO. Just look at a weekly market grid here. High 46.78, 46.10 was R1, R2, 47. There's no price objectives at the moment. There is a key pivot number. This blue line is a big, big number. That is the, looks like 6201. So if we were to get, I know that's a ways away, but if we got over 6201, then those objectives above there, that would be 96 would be a minimum target. But we haven't done that. This does look like some kind of right shoulder. Whether this stock can get going or not, I don't know. Yeah, we'll do AMC next. AMC is interesting, especially since they're throwing, you know, if you look at AMC, you look at all of the other stuff, the cruise lines, all of those, all of the reopening trade has been under pressure because you've got constant, the algorithms are picking this stuff up. And the ranges that we're seeing here, hang on, the ranges that we're likely to see here is moved maybe down to 27.67, should hold there, and then it's a sandwich job. 27 to 44 is going to be the range if we can hold that. But the PPMs are still very positive, so there's a lot of upward pressure here on the for this thing to hold. That's 2767. So you could play off of that. You could look at a play. And if I were a WaveTech user, I would just put it on a daily model, look for it to buy it off of there. Yeah, somebody's asking why I don't cover the Dow Jones. I actually haven't covered the Dow Jones for probably over 30 years. Just never, it's too narrow of an index. So I've always just primarily been on the S&P, and we trade individual stocks and manage money. So that indices never had much to do with, I guess, my analysis. And one of the reasons for it, just come on screen for a second. One of the reasons for that is it's the most manipulated index that's out there, actually. And they've got the Dow divisor, and then they also have a committee that decides. It's owned by McGraw-Hill, and they set up all the different constituents. And they're really, in my opinion, they for years have been trying to engineer the index to get higher and where it's gotten to by taking stocks in and out, and they've got justification for it, but they get to run the thing how they want. So anyway. Yeah, you're probably right on day trading. Yeah, I'm sure. I'm just speaking from an analytical viewpoint. So appreciate it, actually. What time are we getting to be here, folks? 10 minutes to go. Let's take a look at some of the, I'm just going to throw it up on screen and talk about it a bit. But let's take a look at what's going on. And man, this thing has just been stuck in this range. We're down 14 handles right now on the S&P, 4401 on S&P. I'm going to flop over to another graph here just so we can just see the SPX at 4408. Man, this is a brutal market to be involved in. And it would be way too easy to call a top here and say, oh, the market's going to roll over. We are seeing that momentum. Go back and watch the beginnings of this stream today, because you'll get a little better feel. And I'm going to do a 9 o'clock stream tonight, and it'll be pretty brief, probably 20 minutes. We'll get in and get out. So, but yeah, so let's go back to the level 3 for a second and just talk a little bit about this. So like I said, 4,400, I believe S1. Let me go back to this other screen. Let's just take a look at we'll take a look at this. Let me get to the right symbol. And let's get to a daily. I just want to look at the market grid here very quickly. And the market grid on the daily so far today has been low 91, so we traded just below S2, same range, 44.15. We never were able to get over that 44.05 level. We just stalled at that breakout point that I talked a little bit ago. So we just fell back into the range, and it's been very tight as we come into the close. And let's see here if we got, yeah, we got about 8 minutes to go. So maybe I'll do, yeah, we'll get this thing marked up shortly after the, when on the replay, we'll get it all marked up for you folks so you can watch all this stuff. I'm kind of liking the Star Trek scene here. I'm just looking at the studio. I think it looks pretty good. Feels better than just a blank screen in the background. So you can comment on that if you want. Yeah, so 7 minutes to go. It's like watching paint dry. Let's kill some time, and let me do Zoom while we're sitting here with nothing to do. Zoom is breaking out again. I have to tell you, I don't know about you folks, I've been on so many Zoom meetings. I hate Zoom. they managed to position themselves well. But let's just take a look at this. This is a daily chart. We're seeing the market grid break out. Let me go full screen. We're seeing a potential for a daily RXD sell, close over 390.52 or 401.53. Looks like that's going to happen. So we should come in sideways. The market grid will turn up. But one of the things that's interesting on Zoom, we do have projected targets now for 477 minimum on the upside. So that's a pretty big move there. We're looking at, 15, not quite 20%, but we're looking almost 20% actually. So that's a big move. Yeah, so I guess the next level would be 528 on Zoom. Don't know if that's realistic, but I could easily see. I think if we go, this is a daily, let's go over to a weekly time frame real quick here. Yeah, this is probably a little more realistic target range that's coming out of the intermediate charts here. We've already met the 393 level, so next level, 439, 468, and then that number I just mentioned off the daily, I don't think is going to matter. I think these are much better numbers. The all-time high on this stock was 588. So that was when we were having way too much fun back last October. Good question, TradingView question. I am frustrated beyond frustrated. I do have some indicators that I'm trying to get released, and I have some public domain stuff. I have some other stuff I'm putting out there, and I'm waiting for someone to finish a project for me, which I have no control over, and we'll just say maybe they don't even care about money. They don't care about being paid. So I'm trying to get something put together, and I don't want to go to the point where we have to do everything manual on that. It's just going to be a complete pain. So we're seeing some selling coming in here. This is interesting. With 4 minutes to go, going back to the screen here, we are seeing some selling. We're seeing some things. This is interesting. So definitely some selling coming in. This should push the cash. I'm going to flop over to another screen real quick, and this is putting SPX at 04. So I don't think we're gonna finish up below that level. I'll go back to the screen here. Yeah, I don't see that pushing out. So so good question. I guess we'll just chat here for a few minutes. We'll watch this close, kind of keep it going. But yeah, so why is CNBC so focused on that? I don't know. I always say it's okay to watch CNBC as long as you turn the sound off. I use it for a quote screen. Be careful about listening to things on there. Yeah, I did cover oil in detail, so that will be marked up on the replay, so you'll be able to go back to that. But yeah, so it looks like we're trying to stabilize here a little bit. We'll see what sets up. What we got less than 2 minutes to go. So this is that final 2-minute period that I talk to you folks about all the time. And we're really seeing we're really starting to see some of the I guess, day unwind that we're seeing, that folks are trying to bid this thing and it just won't go. And I don't think it's going to go. This is Wednesday. They said we got claims coming out, we got continuing claims, we got a couple other numbers, and everybody's focused on Friday, right? And if ADP is correlated, then Friday's going to be a big miss. So we'll have to, and so this is an interesting conversation to have at the end of this broadcast. Is if we have a, maybe let's hear your opinion on this, folks. If we have a miss on Friday, so let's say they're expecting 900,000 plus jobs, they're expecting unemployment to uptick by 0.1, right? So what happens if we uptick 0.2 or 3 and new jobs are maybe under 300, just like the ADP, or under 200? So is that going to be negative, or is that going to get us to the point where the Fed is going to have to do more purchases and there's no taper, so that becomes bullish? What's your thoughts on that? And I agree with the ADP numbers this morning. It really was epic. So I just, yeah, I would just kind of chat about that. Like I've said before, now we're down 20. We're getting some selling come in right at the close. So we definitely saw some additional selling. And we've got everything really kind of interesting. I'm not sure. I did see somebody talk about when I'm using Streamlabs to stream off of. And it takes up a lot of bandwidth if you use a green screen or a lot of CPU. And I've got pretty powerful CPUs on this machine. But anyway, that's interesting. My Runican is green, so it's invisible. So I think today it's going to be an In-N-Out Burger day. Yeah, I'm kind of in the feeling on this, folks, that we're going to get, if we do have a miss, that somehow it's going to be bad news is good news. I think we might be in the phase where all news is good news. So we go through phases, right? Bad news is good news, and we have all news is good news. Then we go to the other side, that all news is bad news, and then good news is bad news. So I think right now we're kind of into all news is good news. There's a little challenge here. We're on this. There's still some liquidation coming in, and I've explained this to you folks before. Is right at this moment. This is when all the ETFs and the institutional money is balancing their day, and so obviously they had a bunch of selling coming in, so they were covering up. They were covering those sells. So now, if they buy them back, we'll see whether or not they sold too many or not enough. That's what you find out now. And it looks like not enough so far. And I always tell you to watch that last 2 minutes of live trading with the cash running, and then the 2 minutes afterwards. So anyway, folks, I hope you enjoyed this. Make sure you hit that thumbs up, like button. Let the folks at YouTube know that we have liftoff. Okay, so any final things? Yeah, I wouldn't argue that I'm undecided with that, but I think it's going to be good news. If it's bad, it's going to be good news. All right, folks. Yeah, let me know if you like the Star Trek routine. I think it feels and looks better to me, but You guys have to know. You guys make the decision. But anyway, thanks again. I see a lot of names that we see a lot, so I appreciate all you dedicated YouTube and streamers. Haven't done one of these for a while. It was actually kind of fun going on and on, but I definitely hit the wall. So we're talking in and out, triple protein style. So if you know what that means, you live by an in and out burger. Okay, folks, well, listen, have a great day. I'll sign out now, and I really appreciate everything that you guys do supporting the channel. I love it when you guys fight to defend me. It's always a good thing. Have a great day. 9 o'clock, another live stream, 20 minutes. We'll update whatever happens out of this stuff. Thanks again.